Yes, a good afternoon to you live from the Johannesburg Stock Exchange. My name is Arabile Kumete. We get straight into the market picture here. As we get into this market sense, then all roads certainly do lead to some sense of positivity again today. And this is despite the Archegos Capital situation, which has certainly brought a whole lot of question marks to the market overall. When one takes a look at the hedge fund industry, it has been quite interesting to note of late that things haven't necessarily gone the way one would have liked. Nomura Capital hinting then towards that $2 billion loss out in its US unit, then that impacting things along. Global banks could lose as much as $6 billion US. So that tells you the story on that one, that things could get quite interesting there. Overall, though, the Asian picture was positive overall, with the Hang Seng going up 0.8%, a pretty picture as well out of the European part of the world as well, 0.2% higher for the DAX, sitting now at 14,911 points. That positivity, though, hasn't necessarily shifted to South Africa yet. We're sitting pretty much flat at 67,086 points there. So we are not getting the full benefit then of the global positivity picture. Financials, they have gone up 0.3%, then pushed up by the banking counters, which are 0.1% better off. The listed property segment is 0.8% stronger as well. And then onto the companies, the likes of Altron, Cap, as well as PSG have moved up a little bit. Altron more than 9% stronger, with PSG nearly 5% better off as well. In terms of negativity, well, the platinum counters haven't done too well of late. Royal Bafokeng Platinum as well as Anglo Platinum have taken a dip today, with Tex10 and Blue Label Telecoms also following suit. Negativity, unfortunately, for the three big commodities then as well. So Brent crude has gone down 1.33% there. Platinum has also lost around 0.33% thus far, with gold weaker by 1.3%, now sitting below that 1700 mark. Pretty much a picture we haven't seen for quite some time. Weakness against the US dollar as well for the local currency. We're at 14.96 there. A euro will set you back 17.56, 20.58 then for a British pound. All right, then, Owen Nkomo from Nkunzi Wealth joins us today as we get to grips with this market picture just a little bit more. Owen, it's a good to chat to you then as well. Perhaps big questions around how the rest of the world is going up. We're not feeling it, unfortunately. So what's driving this market today?
I mean, people are tired of selling, and I think, guys, you got risk back on again. I think on the balance of risks, people are thinking that the global economy is going to continue to be supported by relatively lower interest rates, even despite seeing US interest rates going up. I think people are digesting the fact that, should things change, the global central banks will continue to make it easy for people to borrow money. And I think that, people are just taking advantage of some of the, some of the sell-off that might have happened in some of the bigger tech stocks, etc. And that's how we're seeing people buying back into the markets now.
That buying back into the market is, the sense here is, however, that there could be a recovery of sorts. We're still not sure how that's going, because it's fully dependent on things like vaccinations and the global pandemic, which does continue to rage on. So is this uptick going to be really based on a whole lot of fundamentals from here and just hoping that things get better?
Yeah, I think so. I mean, there's interventions that are being done. We're seeing the distribution of vaccines. We're seeing an increased ramp up on the production of vaccines across the world. We heard from the president that we're going to start purchasing some of these vaccines, particularly from J&J, that we purchased by Aspen, to obviously make sure that the country also has access to a lot more vaccines per capita. And I do think that people are tending more to be hopeful that even if there's talk that we're starting to see more, or rather more infections across the world, people are talking about the third wave, etc. People are thinking that we've sort of started to master how this disease is transferred, and we've sort of started to prepare for the availability of vaccines. And I think people are just shrugging all the risks that they've been seeing in the past, and hence they're jumping back into the market, Arabile. And I think the presence of these vaccines has given quite a lot more people hope.
All right, well, we'll see how far that hope goes. Let's talk locally then, and particularly on the economic front. Jobs numbers coming out, not necessarily doing too well, but neither was private sector credit extension, the worst in about 19 odd years. It really shows you then how dire the situation is here locally.
It is indeed. It's one of those things that I've said. It's been challenging. Many leaders of the country, many presidents of the country have come in and made promises that they will deliver a certain number of jobs, but they've continued to struggle with that. I think we need to look at restructuring the economy so that we're focusing on those sectors that will deliver more jobs growth than we currently are doing. And more importantly, we have to actually go out there and do the work. Sitting in rooms and hotels and in davas and talking is not going to deliver the jobs. I believe that we need to drive the private sector, we need to drive the government and the unions to start seeing things with the urgency that they require. We need to be creating jobs. We need to be making sure that the platforms out there are created for entrepreneurs to do business and create these jobs. Reduce the red tape in government, reduce the red tape in the private sector as well, in terms of making capital available for people to go out and create these necessary jobs.
And I suppose that private sector credit extension number does tell you that story, just over 2%. It doesn't bode well for things like capital extension, trying to grow this economy, trying to build it. It means that companies, yes, of course, impacted by COVID-19, are just still not feeling the ability to be able to grow, to expand themselves, or perhaps even make more purchases. So weakness is still going to reign for some time, you think?
I'm sorry, I did not hear the last part of the question. Could you please repeat that?
Just asking then if you think that negativity, which of course has been exacerbated and shown by the private sector credit extension number, if you think that will continue then, I suppose, for some time, considering that it means that businesses are not willing to make any further big purchases or any other major sort of loans.
Yeah, so look, I think we need to continue to look at this, the private sector credit extension from the position of where we are, given the corona environment, given the fact that most companies are not back to full capacity in terms of production, in terms of the delivery of services, depending on the model of their businesses. But I think as the number has been relatively volatile, I think that the credit extension, as long as we're seeing some level of credit extension to the private sector, I think that's a positive sign. I would be worried if we saw this number decrease all the way down to zero, because it will say that people can't afford to, or companies can't afford to borrow money from the banking institutions, and it will mean, in my view, that we have got more problems in companies' balance sheets than we previously thought we had. But I think as long as there's some level of activity, I think once we get back to a position where the lockdown is lifted, we could potentially see the money supply, the private sector credit extension numbers starting to increase, because people definitely will need to borrow money to get back to work.
Yeah, that certainly is going to be the case. The economy is going to need it, and it doesn't seem, though, that we're going to get that joy anytime soon, though. This year still might be a difficult one. Owen Nkomo there from Nkunzi Wealth Group joining us to get a lowdown then on this market. Thank you so much for your time here this afternoon as well.